Welcome to our 10th lesson in the Market Profile Beyond the Basics course. Let's review the disclaimer together. Trading and investing involve high levels of risk. Future results can be dramatically different from the opinions expressed in this course. Past performance does not guarantee future performance. The presenter may or may not hold positions in the financial instruments discussed. The title of Lesson 10 is Overnight and Short-Term Trading. Certainly, the overnight session is an incredibly important segment in the market, and we should always take a look at it. And the reason I say overnight and short-term is because sometimes we may be in the market for a number of hours, not necessarily several days, which usually would be described as a swing position. It could just mean a number of hours. You're still within the same 24-hour period, but you have a short-term position that may not mature, say perhaps 5, 6, 7, maybe 8 or 10 hours. Typically, I describe that as short-term trading, not necessarily intraday trading, which is typically grabbing much smaller moves. A short-term trading allows you to capture a little bit more. It could be an hour, 2 hours, 3 hours, but it's certainly still within the realm of short-term trading. We're going to begin by looking at the overnight session. And the last segment of the day before the overnight session is the settlement period. Now, we've talked about the settlement period before in some of our other lessons, but I would like to focus on it in more detail in this lesson because it is a significant period, and as you will see, it has some important ramifications for the overnight session as well as the day session that follows. The chart that we have before you, or that I have before you here, is actually a 15-minute chart, candlestick chart, of course. Now, I also have the VWAP here. Let me grab my highlighter so we can highlight some of these things. So we have the VWAP on the chart. I also have some IB levels on the chart. The 50 simple moving average as well as the 20 simple moving average and our 50 simple moving average, and of course the indicator that we have down here, which is the stochastic. So at least now you have or we have identified all the different elements that we have on our chart so you could follow with me. The one thing that I haven't talked about, which I would encourage you to do, on this chart you will see in the background here a faded rectangle, or a thick bar in this case because the settlement period happens to be small. What I have done is I have drawn a box around, or rectangle around, that last 15-minute period of the day session, and I extend this box out. The box is simply drawn by one of the shape tools that is in Market Delta, or Investor RT for that matter, and we just extend the box out because we need to be looking at it in the future, and I will show you why. So it identifies for us where settlement was. Now, settlement period is just as important as the actual ultimate close of the day, perhaps even more important, as you will begin to see in terms of how it influences things as they develop. So the first question is, what is the relationship between the settlement range and the close? Well, it is very important to look at where we close relative to the settlement range. In this case, the settlement range is very small, and we closed about midway in the range. Sometimes the settlement range will be bigger or larger, and of course if we close at the bottom of the range, it is a very bearish close. If we close at the top of the range, that would be a bullish range. So it's important to understand where the close is relative to the range. And the next question often is, as soon as the overnight session opens, well, relative to the close of the prior session, if we closed on a high note, let's say, and it was bullish, what are prices doing overnight? Are they deviating away from settlement, or are they moving above settlement? It begins immediately to give you some insight about the actual overnight session and how it may develop. Now, you could have a close at the top of settlement, at the settlement range. We didn't have one in this case. You could have it at the bottom of the settlement range, or you could have it at the mid of the settlement range. In this case, when we had it at the mid of the settlement range, it really told us, first of all, the settlement range was rather narrow, and we closed in the middle of it. So it doesn't really tell us a great deal about potential direction for the overnight session, and the expectation would be we're probably going to fluctuate around that settlement period, and we're going to test it a couple of times to see where the market is relative to the settlement period, whether in fact settlement is going to be a level of resistance or level of support. And we will take a look at what happens here. When we open, we end up moving a little bit higher. And notice when we begin to open, we have a new VWAP level, as we always do. You get a new VWAP level for every trading day. And technically, the trading of the 24-hour day starts at, I guess it would be 4:30 in the afternoon Eastern Time, 1:30 Western Time. And so we have a new VWAP here, and it is above here. So that in itself initially is a bullish sign. So prices start to navigate a little bit higher. But we find that they don't go very far, and they start to drop back towards the VWAP. And we get an interesting setup here. Notice how prices now are penetrating settlement, and they look like they're going to drop even lower. When I see my simple 5 moving average heading lower, and I get a close below it, which we did in this case. That's the first criteria of the setup. 15-minute candle closes below the 5 SMA. And then let's take a look at the next piece of the criteria. And the 5 SMA drops below the VWAP. Notice it is dropping below. So it's heading lower. That's our second condition. And the stochastic gives us a confirmation. Here, if we were to take a look here, our stochastic is in fact pushing downward, or facing downward, declining if you will, sloping downwards. Now, we have a set of all 3 conditions. This is a nice indication that we are looking at a short for the overnight session. And if you notice, a number of 15-minute periods continued to navigate and to roll downwards progressively to this next IB level right there. Now, as usual, whenever we take any trade, and any trade setup, by the way, is a probability. It's either a high probability, mid probability, or low probability. This is a high probability or good probability setup. That's why I point it out to you. But nevertheless, whenever you take any trade, you must have some risk management in place. Never forget the parameter of exit, or where you feel the trade has gone bad on you. In this case, it would be the settlement high. If we're dropping, I would be very comfortable using the settlement high, which is this level right here, as my stop. Now, as far as targets for my trade, I have an abundance of them. First of all, you need to realize in the overnight session, the market rarely moves quickly. Sometimes it does, but more often than not, it does move very slow, and you're not going to get a huge move. So the first target would be the 20 simple moving average here, and sure enough, we get to it. The next one is the IB level, which we see right there, and as a third target, the 50 simple moving average. Now, we will progress together with the price action and sort of watch what happens. And I would advise you to stay in the trade provided that the prices continue to close below the simple 5 moving average. That's always a good indication that momentum is on your side if in fact each of these bars is closing below the simple 5. Now here's the continuity of the overnight session. We made our first target and we did make the second target. We barely almost touched here, but we didn't quite do it, and then we came right back up to settlement. But notice the settlement high was a resistance level. Isn't that interesting now? So here it was resistance, here it was resistance. It drops prices back down again, back to the 50 moving average. This time we do touch the simple 50 moving average, and then prices begin to move back up. And we don't have much of a move. We start to get into this congestion, or what is often referred to as the candy cane pattern: one up, one down, one up, one down. This is terrible stuff. No one likes to trade in this kind of an environment, and that's why quite often many traders, if there's really no action, no movement to be had in the evening, they will wait on the sidelines. And as we've mentioned before, patience is one of the best friends of a trader. You have to be very selective, and quite often you have to be very patient. You don't always have to be in a trade, and the more patient you are, the better you're able to select better entries for your trades. Now, the other thing I want to point out to you, which is very important, notice the rectangle that indicates my settlement period. I have not been able to penetrate above it. So I'm going here for several hours, and prices are continuing to move below it. So now this looks like a level of resistance to me. And if in fact I begin to see a strong shift downwards, then I would be inclined towards a short if in fact the simple 5 crosses back up and I begin to see prices take off above the settlement period, and the settlement period becomes a level of support for me. Then I could consider getting into the market with a long position. So notice again, emphasizing the fact that the settlement period is resistance for quite some time. It was resistance here, it was resistance there, and now it's even sort of the bottom of the range of settlement is continuing to be resistance for me for that period of time. But notice, as things continue, things do change. We do get a breakout. And notice again our setup in action that we just talked about, this very same setup. This time the setup is to the upside. What happened? Well, we had a close. Prices jumped above the simple moving average. The simple moving average rose above the VWAP. And prices continued to move higher. So this would have been a good time for me to take a long entry, especially since we have closed above settlement. We sailed right through it. I could take a long up here, and I'll always keep in mind that during the overnight session, you're not often going to get very big moves. It does happen. They do happen occasionally, but typically that's not the rule for the S&P, for the ES Mini S&P. Here the stochastic was also in our favor, so another important thing to keep an eye out for. So you would have had another trade opportunity there. We continue higher. We continue to be bullish. We are above the VWAP, and even now we have a 20 simple moving average rising. Now once again, take a look at what happens. Prices come back, and now they begin to sit right above settlement, and we begin to see this candy cane pattern, but the range has expanded above and below. So notice, throughout the entire overnight session, the settlement period has really been our guiding light for whether to go long or short, whether the price action has moved above it or below it. And now, as we're getting ready to open the day session, we are hovering around it, and it is still sort of the focal point of our interest. That is why it is very helpful each day at the end of the day to draw this rectangle, and notice how I extended it out onto the chart all the way into the open of the following day. And we are going to continue with it and see what happens on the following day. But let's take a look at our reverse setup, if you will. What happened here, just to highlight. 15-minute closes above 5 SMA, which it did. 5 SMA crosses above VWAP, which it did, going up. Stochastic confirmation. Okay, we're in there. Now, you might say, I got in a little bit late. Well, but at least my entry was a safe one. It is very difficult to capture moves sort of in their infancy or the minute that they begin. Most of the trade setups that I like to use may not necessarily capture the full move, but they at least are high probability and they capture something. And keep that in mind that, you know, it's not going to go to the moon. This would have been a very reasonable target in terms of the initial balance level that we see there, and it certainly got up there and made that target. Now, if you were a short-term trader and you wanted to stay in the trade a little bit longer, you could just stay in the trade as long as the each 30-minute or each 15-minute bar closes above the 5 simple moving average. Now, the next thing that I would like to do to really enhance our analysis and prepare us for the next day session is integrate the profile into the overnight session. And so here I have the full overnight session with the profile for it, and the profile shows me the value area high, it shows me the value area low for it, and it shows me the volume point of control, and it shows me where the settlement period ended up relative to the actual profile. So this gives me a very interesting perspective into the overnight session and really helps me to begin preparing for the next day. And you will begin to see that the overnight session actually will influence the following day session. So let's take a look at what happened overnight. First of all, we hovered below settlement, between settlement and this IB high level up here from a prior session, and we kept hovering between the two, and then we broke out through it and we took out 150% high IB, and then we moved up to this level, came back down, and then early in the morning before the day opens we head quite a bit higher. But then we begin to see, once we got outside of value, we got a little bit of price rejection here, and we're getting ready to open the day right around here. So the market is going to open at the value area high. And the interesting question will be, will the day session accept this new value area high and move higher, or will it in fact continue to reject it? And if so, will it come back for a retest of the value area low and a retest of the settlement period? And by the way, that will become very evident during the first 15 minutes of trading once the day session opens. So let's continue on and analyze. Let's analyze the overnight session influence on daily development. Now that we've seen it and we saw what happened overnight, and we have the profile parameters from the overnight session, let's take a look at how it influences the day that is yet to come. Okay, we open right where, of course, this 15-minute period closed. So right here we head up a little bit higher. We can't even take out the high of this prior 15-minute bar, and then we drop quite a bit lower. Now, this is really interesting. Now, the profile for the overnight session helps us to understand and helps us interpret the significance for the location of the open for the new day. We knew that we were opening at a value area high, so we weren't in the middle of value, and we weren't below value to whereby there was resistance above us. We were opening at a time when the market was a little bit bullish but had met some resistance up there, and in fact the resistance continued the minute that we saw prices drop back down into value. And now the question is, what is going to happen next? What is likely to happen since we opened right there and at the value area low, and the rejection continued? Now, since we open at a point of rejection and prices drop, the next thing we are going to look for is, we're going to open here, which way are prices going to move? Are they going to come back up for a retest of this zone, or are they going to continue lower? If in fact prices continue lower, that is an indication of a weak market, and we may end up continuing to drop even more and more. If in fact prices move back up, that's not a very weak. It's a moderately strong. So we're not going to drop right away, and it's not going to be a strong trending day from the get-go. So let's take a look at what happens next. We dropped all the way down to the VWAP level. But the other more interesting observation I want to bring to your attention is that the price range of this 15-minute bar cleared through half the distance between the high and settlement. Here's the settlement period right here, and here is the high. And in fact, we dropped through half of that. Once you see that happen, there is a great possibility now, since we've opened the range lower and we've dropped below half, that we're probably going to come back for a retest of settlement. High probability. Again, nothing in the market is ever certain, but this is a high probability action based on observations of other similar situations when this happens. So when you notice that this bar takes out all the way through mid-range of that segment between the prior level of resistance, which was the settlement high, and this new high, then we know we're going to come back for a retest of it. Now let's take a look and see if we are proven correct. Now, if you wanted to enter the trade, you would probably want to short when prices drop 2 ticks below the close. So if price opens here where we close and drops 2 ticks, then I would be willing to take the short. The reason I wouldn't want to take it if I only had 1 tick, sometimes market makers will drop it just 1 tick intentionally to mislead. I really like the 2-tick rule. It gives me an added confirmation, an added level of safety, if you will. And usually, even if it drops those 2 ticks, you could probably still get it at a good price up above the 2 ticks, because prices will usually fluctuate in this area quite a bit before they slide down, unless, of course, it's an incredibly strong trending market. So let's see what happens. If we did, in fact, go short here, we would have gotten all the way down to our new IB level here, and we didn't quite make it to our value area or the settlement. We actually made it all the way to the value area low, but we didn't make it to the settlement high. However, if in fact this were my entry, and my stop would have been the high of this bar, I would have still continued to be in that trade. Now, what if in fact I had reached this level here and I got out with my trade, prices went back up and moved higher? Well, the next time prices come back and drop below this level again, as we did in this bar, I would short again. There's no rule that says we have to take the trade only once. So we take it in this bar, it takes us all the way down to the value area low. I exit somewhere around the value area low, and now I'm out. What do I do next? Well, if you notice, prices open here, I'm sorry, prices open up here where this bar closed, so we open up here and then they continue to drop down. As prices are dropping, when they take out the low of this level where I entered before, I am ready to go back in again. As a matter of fact, anytime you take out that same low twice, the move now is likely to be a greater move. And sure enough, it drops 2 more bars. Interestingly enough, this time we close below settlement. That is a rather ominous development, if you will, and I would expect prices to continue to move lower. Now let's take a look and see what happens. Take a look at the move down. And as a matter of fact, if we look at the rest of the day activity, for the rest of the day activity could not break settlement. We tried to come back up here into it, resistance. We tried here, couldn't get through it. Another wick here, we tried to get into it and we dropped, and we continued dropping. Now notice how settlement from the prior day, the overnight activity and the overnight development influenced what happened during the day. This is why it really behooves us to study the overnight session and take a look at what happened in the overnight session, and also to track that relative to the settlement from the prior day. Now, there are many different things that could happen. Sometimes this will become a level of support. Prices will shoot up higher. Sometimes prices will open and never come back to take a look at settlement. But all of these scenarios, settlement will still have been helpful for us because it really shows us where we are relative to settlement. So that is a nice big plus of knowing the importance of settlement and the overnight session. Now notice here how the development continued lower all the way to the IB low 200%, the 200% IB low. And I left the stochastic there to show you sort of how it too continued to form lower highs, and it continued to drop as prices continued to drop with it. This is an example of what I would describe as a short-term trade. If you notice, even if you would not have taken the aggressive early one and you would have taken the second one when prices cleared the low here, you would have been in the trade for, there's 15 minutes, another 15, half an hour, here's another hour, here's another 30 minutes, so that makes a full hour, another hour and a half, an hour and a half, 2 hours now, 2 hours and a half, and then 3 hours. So that's what I mean by a short-term trade. Now, why would you have stayed in this trade that long? Take a look at my 5 simple moving average and take a look at where we close relative to the 5 simple moving average. Each time we close lower. We closed lower here. Lower, lower. We almost made it above, but not quite. And the market makers, and market does that to shake you out of the trade. And sometimes it gets close and starts heading higher. In this case, it didn't. You have to play it by ear, and you have to watch. carefully. And even if you would have been taken out at this point, you still had been involved or participated in a really nice trade. Now, one thing we often will do as the move progresses, two things. One, you could take profit off the table and then go back in, enter again. That's one reasonable approach. Yes, you will pay more commissions, but at the same time, you'll get to pocket more of your profit. Now, another thing you could do is you could keep lowering your stop. So if our stop had started way up here at the high, this would be where I would move it next. And then as we drop lower, perhaps this would be the level where I would drop my stop. I prefer the approach of going in and out, capturing some of my gains, pocketing them, and going back into the market, rather than to continue with the same trade and keep dropping my stop. I find that when I do that, I tend to get hit more often versus if in fact I take my profits and pocket them. So as you can see, the profile for the overnight session gives us the context in terms of what happened overnight, and basically the open is a continuity in terms of what happened then. Those who choose not to look at the overnight session basically and just think they're trading from one day session to the next would just see a gap up, an open up here and a close that was down here, and then really we drop back to fill the gap. It's a whole different perspective, and I don't think they get the same insight as being able to look at it and analyze relative to the value area high and relative to the different IB levels. And of course, do not forget the settlement range. What happened relative to the settlement range? We obviously tried to move higher several times. We were not successful, and so we ended up dropping. And the day activity, when it came back up, trying to break through settlement, was unable to do that, and therefore we ended up continuing to drop with prices for most of the day, and price development continued lower. Now, just as we can see there is a correlation between the overnight session and the day session, I'm now going to switch gears and show you when you're going to trade short term, if you want to capture moves, there's also a correlation between one day to the next and what is happening in the overall week. So we are now going to look at trading ranges, and we are going to be correlating weekly and daily price range movements. We will begin our discussion with this 1 hour chart. So now we are looking at a different periodicity. We're not looking at 15 or 30. We are actually looking at a 1 hour chart of the ES Mini. Now you will be receiving a chart definition for this chart, so you won't have to prepare it from scratch. But let me describe for you what the chart really includes and what the different colors signify. Well, we begin really on a Sunday afternoon when the market opens, and for the ES Mini, which is a 24-hour market, our open begins on Sunday afternoon. And we have the first hour of trading, and we begin by looking at that as our first range, kind of the way we structured the IB levels: an initial balance high, initial balance low, and we look at each of these green lines is the center of that range movement. So there's my first hour. Then my range expands. What happens when the range expands, my chart will automatically adjust the range parameters. So I'll have a new center based on this new range, and we're heading higher with the range. And so we are seeing range expansion to the upside. And every time that happens, the chart will automatically adjust the different range levels from the midpoint upwards. So you can see the inside range, the outer range, and each of these represents a level that will continue to grow. Now, here we expanded in this hour, expanded the range, then we came back down, and we came back up. In the next 2 hours, we expand the range further, and ultimately, during the first overnight session, the range ended up all the way from, and let me see if I still have my, yes, my highlighter right here, from here all the way up to here. So here's my low, here's my high, here's my full range, and here is my midpoint of that range. Now notice, we came to the high of the range, we dropped a number of times, and we found support at the midpoint of the range, emphasizing for you the importance of these midpoints. Now, what happened next is we shot up and we tried to get up to the high of the range. We were unable to do so. However, when we opened the following day, on Monday morning, we open up here, we expand the range a little bit higher, and then notice what happens. We come right back. Now, would you be willing to take a short at this point here when we break the low of this 1 hour? And the answer should be yes. We've come up to the high of the range. We tried expanding the range. We failed. So obviously we're going to go back down to see if the range could be expanded to the downside. And sure enough, take a look at the extent of this 1 hour and how big that range was. This was quite a move for a 60-minute period, and you could have been in that move from up here if you were looking at this chart and you were following the different range expansions from the overnight session to the day session. Now take a look. Once we get down to here, what happens to the range for our week? Well, we open and then we continue to drop, continuing to expand the range even lower and lower. And we get down to here. Then we get an inside candle. It doesn't really expand the range higher or lower. But the following candle expands it even lower yet. And this becomes a low here. Now, what's interesting is now we have an expanded range where for the first day, this is the high and this is the low. And at the same time, remember, this is my high and low for the week. So let's take a look and see what happens. We get 1 hour that pushes back up, and then we get another hour that takes out the high of this hour that preceded it. Well, this would be a reasonable point to take a long entry as well, and we could be in the market for another 2 hours there. As you can see, the market did continue higher. It does fluctuate, and it will always do that. The market never moves like that all the time. What it does is this kind of thing. So expect quite often as you're heading up or down to see a lot of gyrations before the move is completed. And this is why, to a large extent, a lot of people get shaken out of the trade, and sometimes it behooves us to just be patient and allow time for the trade to come to fruition. And since we rejected this low range, a reasonable target for us before we're going to move any higher is the mid of the range, and to see if in fact we could make it through the mid of the range. Now notice we obviously could not, and so here's what happened. Prices rolled back down, but they stabilize at this level. They don't come all the way back to the bottom of the range. They stay up here, and then we come back for another attempt. It fails, and then what happens? Prices drop back down, and they drop back down to the same level of support where we were before. All right, now notice I have two VWAPs on the chart. I have a light blue one, a cyan, and a gray one. The gray one represents the day, and the cyan is the weekly VWAP. Now, to identify the other elements on the chart, hopefully from the color scheme that I consistently use, you are now able to identify the other elements, or the remaining elements on the chart. Certainly the 5 SMA is my green line here, and this is the 20 simple moving average, and this is the 50 simple moving average. Now, let's go on here and take a look at what happened to the mid-range as the range continues to expand. As we expand higher, the mid increases, the mid moves higher. Now notice, as we drop lower, the mid continues to drop lower. The mid becomes a very important point, very important transitional point. Certainly we're not going to move above the mid until we get to it, and then when we get to it, what happens at it is very important. How far back do we have to drop before we're able to have enough momentum to pierce through it? And in this case, we dropped once, we came back, we dropped twice. On the third try, we were able to break through it. Now, a couple of important observations that will help with trading in general, and trading using these ranges where we are correlating the day with the week. Remember, in Monday, really the range for the entire week is before us, because Monday expanded below and expanded above the overnight, so that's the full range of the week. And we will go through this full week together step by step to see how things develop and how the day and the week correlate together in terms of their ranges. Now, when you get a second close above the mid-range, high probability range will expand higher. So what do we mean by that? Well, if you take a look with me, I had one close here above the mid-range, and then I had a second close above. High probability the range will expand higher. It sure did. Right away we begin to see, and let's go on to our next slide. Now, on the first day of the week, this is the Monday, what happened? First day of the week, price expand the range lower. The other thing I want to look at is the extent of that range relative to the full week. How much more room do I have based on a weekly price range, the average true range for a week, to move, and is it going to be to the upside or to the bottom side? And if we take a look here, we've made about a little bit over a 20-point move, around approximately 20 points. Now, for the week, a reasonable expectation for the ES Mini should be anywhere from 35 to 40 points for the week. So I still have 20 points to go. I could go higher, I could go lower. Now, remember, we're talking averages. There are sometimes when we may get a week that could be 50 point move or a 60-point move, but the average typically is around 35 to 40. So in the first day of the week, we expanded the range to the bottom side. Now we want to take a look what's going to happen as the week progresses. Once we get a close above the mid-range, expect prices to eventually start to move higher. We talked about the two close rule here, one, and here, and prices did move higher. Now, notice here, this is rather interesting. We get a huge wick from the top of the range. Remember, we had sellers here, and look at their impact. Obviously, the sellers have not gone away. The sellers are still there. The key question that remains, will the buyers be able to absorb all that these sellers can offer so we could take prices higher? And the only way we can find out is really to take a look at how the range continues to develop and what happens from one day to the next. But before we do that, let me show you a bear trap. I've tried to identify them for you so you can learn to watch out for them. In this case, we came up we closed right at our midpoint of the range. By this point, when that happens, a lot of people get very bullish, they're very happy, and they expect that we are going to continue higher. Because of that bullish sentiment, here's what happens. The market makers will drop prices to give us the illusion that, in fact, wait a minute, we're not going to move higher. This is a level of resistance. It certainly failed before here. And since it did fail before here, then it would not be unreasonable that it failed again. So now a lot of shorts start to come in when they see this red bar. Aha, resistance. We want to get in early on it. We couldn't pierce through it. And to even bring a few more in, we continue dropping with this red bar. Now all the shorts are in there and they're happy. 2 consecutive hours of prices dropping. They expect we're going to go back and retest the low of this range. Now notice what happens. We get this doji action, and bam, the market shoots like a rocket, takes off on the next leg up. So this becomes what is known as a bear trap. The bears were expecting the prices to continue lower for another retest of the low, and they wanted to stay in that move, and they probably put their stop up here. And now, as prices come back up to the midpoint, they have one of two options. Either they can stay and say, we'll wait until it comes back, or they can begin to cover. And what happens when they begin to cover? They fuel the move higher. They actually provide more momentum to the upside, even though they were bearish back here, but now to cover, because how does a short cover? They have to buy to cover their short. And when they buy, that will push prices even higher. So even though the expectation is once we get a close above the mid-range, expect prices to eventually move higher. Eventually is the key word here. Don't expect them for sure that they will continue higher, but eventually. And so if in fact I see some hesitation here and it drops, but then when I begin to see prices picking up again on this end, I am in the move, and I anticipate that this will bear fruit, and the likelihood of it being successful is much higher. Keep in mind, again, talking about probabilities. With the market, there are never any guarantees. We just sort of base these conclusions based on patterns that repeat again and again in the marketplace. All right, another great bear trap happens as things progress. Notice we left it off with this big wick here, huge wick down, and sure enough, that was the point. That was the point where we had some sellers in the past. We talked about this, and now notice to reaffirm for the bears that we are heading down. The sellers are just unsurmountable, and we are going to drop lower and lower, another hour lower, followed by an additional hour lower. Now the expectation of most of those bears is that we would continue for another test of this low. But look at what happens. A gigantic bar to the upside. Wow. Now I've got a lot of bears trapped in here. I've trapped them again. And this time, if some of them put the stop where it belongs way up here, they are really trapped, because if they begin covering here, or if they don't cover, they are going to stay in the trade, but they're still going to hurt if we come out and take out this high there. If in fact they put the stop somewhere in this area, then at this point the stops are being hit, and this will provide us with the fuel for the rest of the up move. Be careful about those traps. Unfortunately, they occur and they happen frequently. And sometimes there's really nothing to do other than if you get caught in a trap like this one here, what I had suggested before is capture some of your profits. So let's say you captured your profit at the midpoint, and let's say when you dropped below the midpoint, you went back in again. Now, as you drop back in, when this opened and you begin to see that this rises above the midpoint of this bar, this preceding bar, that would be time for me to exit. And I would not stay. I would not wait for it to go all the way up like that. The minute that I am midway past the range of this bar down, I would just sort of minimize my losses and exit at that point. And there's nothing wrong with saying that once you get up here, take another long and move with it to the upside. You can always, once you're out of the market, and you don't get overcommitted to a position, you always have the flexibility to maneuver and come back in a different direction. And that's why it's very important to always have risk management in place, to always know at what point you would be willing to abandon the trade, and identify that point as part of your strategy before you even begin the trade. You don't begin looking for that point once you're in the trade. This should be something you know in advance of entering. Where is my stop loss? And that should be part of your risk assessment formula. All right, well, take a look at how things continued. And again, remember, we talked about short-term positions. So this does involve a number of hours in the market. And we are now in the evening session right here after Tuesday. This is Tuesday. Now, notice the chart does not expand the range even though prices move higher. That is by design, because the same way that we look at the first two periods in terms of the first 230 minutes for the initial balance, the way that this chart is designed, the range takes into account the first two trading days of the week. And then we want to see, are we above that range or below that range? So the first 2 days give us the basis or the basic range, and then we want to see how far we are or how we're moving inside or within that range. It really helps us to correlate the day with the week. You will really like this chart if you begin to use it in your trading, because it allows you to see lots of interesting things that you would not normally see. So for instance here, take a look at what happened. We are now outside of the range, the 2-day range, and notice what's happening. We have a bunch of wicks to the downside which indicate selling. So isn't that interesting? As we got away from this range, we have sellers. So in this week, the outer limit of this range, there is some strong selling activity. And that is important to keep in mind. Now notice, we have a double top here, and many traders recognize the double top as a sign to short. Now you need to realize and recognize that the market makers know that. And so you are probably going to short when you see this, especially when this closes as a red candle. But here's what happens. The next candle opens, and look at what it does. It shoots back up again. Why does it do that? So it would kill all the stops that were placed up here. And notice what it does after that. It's not that these people were wrong or misread it. No, this is a zone of rejection. Prices are going to drop out of this zone. But we're just going up here to mess with all the poor folks who put a stop 1 tick above, 2 ticks above. And this looks like about 2 points above the high, the prior high from this double top. And then look at what happens following that. Now, do we not get into the move? What happens? If in fact you had done that, you read it correctly, you should compliment yourself. And when you see that it takes out your stop but then comes back and drops here, get back into the trade. Don't let them shake you out. This is a very common ploy in the market. You read the direction accurately, you're in the right direction, and then a move takes place to push you out of your good trade. When you see that, come back into it, but do take the hit, get out. Often people will say, "Well, I'm going to make it a wider stop." Well, how wide do you make it? Sometimes here it was about 2 points. It could be they'll go up 5 points. The best thing to do is just take a small loss and then go back in again. You're going to make it up on the next trade. Sure enough, prices, take a look at what happens, and finally the retest of the low begins to happen. We head all the way back down to here, and notice again my 5 SMA rule. Close lower than the 5, below the 5, below the 5. I'm in the trade. This is another beautiful short-term trade. Every once in a while you're able to capture those, and if you abide by my SMA rule, it will help you stay in those trades. I am sure that as these lessons become known, the market makers will stop abiding by the 5 SMA, and they're going to change that. That's the trouble with these rules. They never hold for very long. Once the market makers discover them, they certainly will do something to make sure that they don't work. But at least for now, they are working, and they can be used. All right, now I just want to show you how many opportunities present themselves based on the techniques and the setups that we've talked about. Close above the 5, range expands above the 5, opportunity 1, move higher. Yes, it's 1, 2, 3, 4, 5, 6 hours perhaps. It is a good size move. The 5 simple moving average is above the VWAP, heading higher. There's opportunity 1. Incredible how many opportunities I'm going to show you. Short here. Once we drop below here, another opportunity for a short trade drops down to here. This case, the SMA is not with me, and so I'm going to have to rely on some of these levels. Once I begin to see prices heading back up and a close above the level that it had pierced, I would exit at that level there. That's another good opportunity that we see before us. Now, some more. Take a look. Third opportunity. In this case, look at what happened. We come back up with this huge big green candle. Interestingly enough, we take out the high of this candle, but then we drop back. Well, if you had entered this trade somewhere in here, where would you have put your stop? And a reasonable answer would have been in the middle of this huge candle, or at the VWAP. Either one of those two would be reasonable. Notice how it came back for a retest of the VWAP. But if you were in the middle of the candle, that would have been a little bit safer. Nevertheless, it did not take you out. You're in the trade. Next hour, it continues on. These types of short-term trades take patience to come to fruition. Another hour, nothing is happening. Another hour, but then things start to slowly and gradually happen. But look, we have to wait another 1, 2, 3, almost 8 or 9 hours. Then we kick into gear and we head higher. Now, once I get up to the high of the range, I'm out. You need to sort of set those parameters and targets for the week. But the opportunities don't end. I had another opportunity here at this point. I could have entered once I hit the high, get above the high of that. There's my 5 SMA heading with me. This is a nice trade to the upside. Now, let's take a look at that one. That's another beautiful trade. We talked about it, the double top, even if you had entered at the double top, and it takes your stop out, get back in there again once it breaks the low. So you can see that using this tool, using this chart, and the idea of correlating the day range with the week, it really presents us with a number of interesting and helpful opportunities. Let's continue on. We're only on Tuesday, but we want to go through the entire week. Any opportunities here? Well, there are always opportunities. We have already identified this one. That isn't the one that I'm really looking for. The one I'm looking for is down here. Notice what happens here when we get below the weekly range that we have identified for ourselves. And this is really powerful here. Take a look how many hours and what's happening with all of these hours. Okay, 1, 2, 3, 4, 5, 6, 7 wicks to the upside. Wouldn't you be willing to consider taking a long at some point here? Certainly, if we take out the high of this candle, I would certainly be thinking about a long. And if I did, and I would use, let's say, the range low as my stop, let's see what happens to me, okay, as we progress with the week. All right, we shoot back up and shoot higher and higher yet. And we get back right up to the midpoint of the range again. Now, this is the Thursday day session, the open of the Thursday day session. Look at that first hour. What a bullish first hour. And you would have anticipated it and known simply by looking at this that we are going to move higher. Yes, in the evening it took quite some time for that to come to fruition, but ultimately it took off like a rocket. These range correlation charts are very, very helpful. Now, we get another bar up, another hour, and then notice what happens again. Prices start to drop again. And that is the pattern of the market. It's never sort of always going up or going down. Change is the one thing that is constant in the market. You can always expect things to change in the market. Now, here, once you begin to see a wick like this, if you weren't already out at one of these high levels as you pierce through some of these levels, if I was in this and I was long, I probably would have taken some profit here at this level when we got to the VWAP and then gone back in again. When we made it to the midpoint, I would have taken a little bit off, got back in again, and then when we made it to this level, got in and taken a little bit off, taken some out. So it would have been a number of different trades for me as the trade progressed. But if you were actually in this trade and then you begin to see a big wick like this, it is time to exit that trade right here when you're still positive. And certainly when this closes below this candle, you must get out of that trade. What are you waiting for? If anything, you should be thinking about your short at this point, about taking a short for the next couple of hours. Move in harmony with the market. We have examined and looked at a variety of different tools. The purpose of all these tools is really to help us track and follow market action from a number of different perspectives. That is the whole idea, so that there's more than one way to skin the cat, if you will. And that's why the 60-minute charts can be useful for short-term trading, and this day and weekly range correlation is also very helpful for identifying potential decent trade setups. All right, we'll conclude our lesson here, and as usual, please feel free to forward your questions to me.